Welcome back to our weekly newsletter on the economy, where we bring you the latest updates on business and economic trends. Today, I will take you on a journey through this week's newsletter. To receive our weekly newsletter and stay informed on the latest economic developments, simply follow our website in the description below. Let's dive in. In 2022, the sports sector in the EU experienced a remarkable growth with a total of 1.51 million people employed. This marked a substantial 10.9% increase compared to the previous year. Among the EU countries, Sweden led the pack with 1.4% of total employment in the sports field, closely followed by Finland and Denmark with 1.2%. On the other hand, Romania recorded the lowest share at just 0.2%. Interestingly, there was a gender employment gap in the sports sector, with 55% of the workforce being men and 45% women, surpassing the overall employment gender gap in the EU. Additionally, young individuals aged 15 to 29 dominated the sports sector, making up 35% of the total workforce. So, furthermore, 46% of those employed in the sports sector held medium-level education qualifications. Moving on to Germany. In May 2023, the manufacturing orders experienced a decline of 0.5% compared to the previous month. Additionally, the stock of orders was down by 3.3% year-on-year when compared to May 2022. These figures indicate a slowdown in the manufacturing sector, which could have implications for the broader economy. On the positive side, Lithuania's economy showed signs of recovery in the second quarter of 2023. The gross domestic product grew by an impressive 2.8% in the second quarter when compared to the previous quarter. The construction and transport sectors were the primary drivers of this growth. These figures indicate a positive economic momentum for Lithuania, despite the challenges posed by the ongoing global economic situation. Shifting gears to central banking news, the European Central Bank took action to tackle high inflation by raising its key policy rates. The ECB increased interest rates by 25 basis points in line with market expectations. However, even with this increase, the bank expects inflation to remain above the 2% target for a prolonged period. The Council has indicated that restrictive interest rates will be maintained until inflation returns to the target, based on economic and financial data. This move is aimed at addressing inflationary pressures and ensuring price stability in the European Union economy. Let's take a look at Turkey's trade performance in January-June 2023. Exports saw a decrease of 1.9%, while imports increased by 4.1% during this period. This trade data could have implications for Turkey's economic growth and trade balance. According to the International Monetary Fund, inflation in the United States and the euro area has shown signs of easing in recent months, primarily due to declining energy and food prices. While market expectations suggest a decline in headline inflation, some investors remain wary of potential upside risks, particularly in Europe. Despite ongoing monetary policy tightening measures, financial conditions have surprisingly eased, making it challenging for central banks to bring inflation back to their 2% targets. The combination of prolonged loose financial conditions and tightening monetary policy may have weakened the transmission of these policies. There are concerns about vulnerabilities, including leveraged investment strategies and regional banks facing profitability issues. The optimism among investors about disinflation and the soft economic lending may be overly optimistic, necessitating central banks' continued vigilance. The Bank of England is expected to raise its interest rates by 0.25 percentage points to 5.25%. There is also some risk of a surprise half-point hike due to persistently high inflation. Unlike other central banks such as the US Federal Reserve and the European Central Bank, which are nearing the end of their rate tightening cycles, uncertainty surrounds the peak of Bank of England rates as investors debate the extent of Britain's inflation problem. Expectations for peak Bank of England rates range from 6.5% to 5.75% or 6%. The anticipation of higher rates has already impacted mortgage costs and has contributed to a slowdown in private sector growth. Bank of England Governor Andrew Bailey has emphasized the importance of curbing inflation amidst these economic challenges too. Turkey's manufacturing industry. In Turkey, the capacity utilization rate in the manufacturing industry saw a slight increase of 0.3 points compared to the previous month, reaching 76.9%. This data suggests that the manufacturing sector is operating at a relatively high level of its production capacity, which could have implications for industrial output and economic growth in the country. In the euro area, annual inflation has decreased to 5.3%. This decline in inflation may bring some relief to consumers and policymakers who have been grappling with high price levels in the region. However, central banks will likely continue to monitor the situation closely to ensure price stability and economic growth. Turkish Express shipping service Getir has made strategic decisions amid a cash crisis. The company will be exiting its operations in Spain, Italy, and Portugal, but will continue its services in the Netherlands, Turkey, Germany, the UK, and the US. Getir's decision is driven by its confidence in the potential for success in the latter 5 countries, which contribute to 96% of its total revenue. The move follows speculations about a possible exit from the Netherlands due to a company reorganization. The cash crisis has made it challenging for Getir to secure funding during its ongoing funding round. Additionally, Amsterdam City Council has imposed restrictions on rapid delivery service depots, citing concerns over noise and traffic. We are going to Serbia. Serbia has been making waves in the industrial sector. In June, the Republic of Serbia recorded a remarkable 2.9% surge compared to the average of 2022. What's even more impressive is that manufacturing soared by 1.1% month-on-month in the same period. Now turning our attention to Hungary. Industrial producer prices in Hungary took a leap in June with a notable 6.4% increase compared to the previous year, while domestic output prices shot up by the 29.8%. Non-domestic output prices saw a decrease. The energy industry played a significant role in this difference. And shifting gears to the land down under, the Australian manufacturing industry faced a challenging month in July, with the AI Group Australian Industry Index plummeting to minus 14.7 points. It marked 15 consecutive months of contraction. The Australian PMI dropped to minus 25.6, the lowest since the early months of the pandemic. In South Korea, the consumer price index eased to 2.3% in July. This easing supports the central bank's decision to pause its rate hike cycle as they navigate economic dynamics. The World Bank's pink sheet brought us insights into commodity prices. In June, energy prices saw a dip of 1.8%, while agricultural prices dropped by 2.4%. However, metals remained steady during the same period. The Turkish manufacturing sector export climate index for June stood strong above 50, signaling a continued positive export environment for Turkish manufacturers. The index eased slightly to 51.1 from May's 52.3, indicating a moderate progression. Demand growth from the Middle East and the BRIC countries keeps Turkish exporters on an upward trajectory. Going to Belgium. In second quarter, Belgium's economic growth slowed to 0.2%. The industry faced a 1% decline, while the services sector showed resilience with a 0.5% increase. Going back to Euro area. Euro area's unemployment held steady at 6.4% in June. Youth unemployment experienced a slight uptick, reaching 14.1%. These figures reflect the ongoing labor market dynamics. The World Trade Statistical Review 2023 reveals fascinating insights. World merchandise trade volume rose by 2.7% in 2022, and trade value surged by 12.4%, driven by geopolitical tensions. Commercial services saw robust growth at 15%, with digital services taking the lead. Switzerland's services sector takes a hit. In May 2023, services turnover dropped by 6.1%. The wholesale and retail trade felt the impact of these fluctuations. In June, Austria saw industrial producer prices rise by 0.8%. Although there is a price momentum slowdown, the Austrian industry maintained its course. Spain's unemployment rate hits its lowest point since 2008, with 2.68 million unemployed in July. The rate dropped by 7.14% compared to the last year, painting a hopeful picture of recovery. In June, Greece's industrial producer prices witnessed a sharp decline of 11.7%. Interestingly, there was a slight monthly increase of 0.8%, adding a twist to the story. World Investment Report 2023 unveils a concerning investment deficit of $4 trillion for developing countries striving to achieve the SDGs by 2030. Global FDI fell by 12% in 2022, highlighting the need for the urgent support in attracting investments for clean energy. The report suggests a global action compact for investment in sustainable energy for all. The manufacturing PMI in the US faced its 9th consecutive contraction in July, registering 46.4%. Although there is a slight improvement from the previous month, new orders, production, employment, and backlogs experienced contraction. Only the petroleum and coal products industry showed growth, reflecting the ongoing challenges in the sector. Our final stop is Ireland. Ireland's jobless rate made a slight dip, falling to 4.1% in July. This indicates a positive trend, reflecting potential improvements in the country's job market. That wraps up our economy newsletter for today. We covered a wide range of topics. Stay informed and tuned in for more economic news in our upcoming episodes. Thank you for watching and remember to subscribe to our channel for the latest updates.